and business professor at Harvard, wrote an op-ed earlier this month on how Elon Musk's business empire may be starting to wobble. Now, while a lot has been made of Tesla's stock price halving in value since it hit its all-time high in December, if we zoom out a bit, the stock price is still up more than 50% over the last year. Stock price alone doesn't necessarily tell us much about how a business is doing. Aswat Damodran of NYU has long argued that company valuations shouldn't be approached as purely number-crunching exercises. In his book, Narrative and Numbers, he argues that valuation is instead a bridge between stories and numbers, where every story becomes a number in the valuation, and every number in a valuation has a story behind it. Matt Levine has argued in the past that Tesla investors don't value Tesla or any of Musk's companies on what they actually do. Instead, they think of them as venture capital funds run by a guy with a strong record of investing in whatever's the hot new thing. If the company's profits don't match up with the stock price today, that doesn't really matter to them, as next year a great new product will be unveiled: solar roof tiles, a robot, a tunnel to Europe, a sports car with rockets on it, artificial general intelligence, an everything app based on Twitter, or a colony on Mars. And this business, which is just around the corner, will be so profitable that the naysayers will be proven wrong. Now, of course, I'm no naysayer. Long-term viewers know how positive I've been about the Hyperloop at the heart of the Line City in Saudi Arabia, and if it wasn't for the functionality of Musk's Hyperloop, the whole thing would make no sense. In a totally unrelated side note, Elon Musk told Fox News on Thursday that the administration is going to go after people pushing lies about Tesla. So just to be clear, I expect all of the above-mentioned projects to be delivered next year on schedule, and I think that they'll be great. Desai in his article says that while Elon Musk built a car company from the ground up, along with a number of other businesses, which is no small feat, his wealth is mostly explained by a financial cult, where Musk has been largely immune from critics. He writes that skyrocketing Tesla shares have made fans and investors so devoted that all Musk has to do is mention a new ambition to goad them into buying even more stock. And the larger the stated ambition, the more wealth and power they hand to him. He argues that since Musk's foray into politics, not just in the US but around the world, cracks in his empire have started to show. He highlights how automotive revenues and profits at Tesla have declined and points out that 22 years after the company's founding, it remains unclear if it can ever generate significant free cash flow for shareholders. He says that Tesla appears to be relying more and more on price cuts, a practice that can increase sales in the short term but damages the brand in the long run. He says that the political backlash against Musk is now hurting Tesla sales, and that perhaps sensing the shifting tides, Musk has been suggesting that Tesla is an AI company to further nourish the investor cult. In looking at Musk's other business interests, the Harvard Business School professor argues that SolarCity has atrophied since its controversial acquisition by Tesla in 2016, that it's unclear if the Boring company has any revenues or prospects of profit, that the possibility of profits for Neuralink, the brain implant company, seems even more remote, and that Twitter is a shell of its former self, both economically and culturally since its acquisition. He points out that SpaceX, which is more than 20 years old, has raised an estimated $12 billion and is only now rumored to have possibly achieved $12 billion in annual revenue, which is not the same as profit, mostly from Starlink. Desai makes the point that Musk's wealth is not derived from the cash flow his various businesses throw off. More money has gone into them than they've returned in profits. His wealth is derived instead from their stock valuations, which are driven by the hype around Musk and the belief that amazing breakthroughs are just around the corner. Musk's businesses have not been generating much hype of late. Growth seems to have halted and competition has grown. One of Tesla's most vocal investors has even called for Musk to step down as CEO. Before we get to that, let me tell you about today's video sponsor, Delete Me. Delete Me is a subscription service that finds and removes your personal data that's being collected by data brokers and sold online. Data brokers are businesses that collect huge amounts of personally identifiable information on individuals and package it up to create profiles, which can include things like social security numbers, birthdays, past and recent addresses, information about your family, and much more. You're legally entitled to protect your privacy by requesting that data brokers delete the information that they store on you, but unfortunately there are hundreds of data brokers and they don't make it easy to get off their lists. It could take forever to do this on your own. I used Delete Me to reach out to the hundreds of data brokers on my behalf to request a deletion of my personal data and to deal with any objections. I got a full report back showing where my data was removed from. With a yearly subscription, Delete Me tracks them and makes sure that they don't re-add your data to their lists. Get 20% off Delete Me US and UK consumer plans when you go to joindeleteme.com/Boyle and use promo code Boyle at checkout. Tesla's stock price nearly doubled in value after Donald Trump's election win last November, driven by optimism that Musk's alliance with the new president would remove business obstacles and possibly pave the way for lucrative federal contracts. Tesla at the time faced a criminal fraud investigation and a related SEC investigation into exaggerated claims about the full self-driving capability of its vehicles. It faced a joint investigation by the DOJ and SEC into misuse of company resources over plans to build a private residence for Musk using company funds. The U.S. Attorney's Office was looking into whether Tesla had deliberately misrepresented the battery range of its electric cars to customers. There were 4 NHTSA investigations into vehicle problems, 7 cases alleging unfair labor practices, a racial discrimination investigation, and an OSHA investigation into a worker's death. His other businesses faced investigations and federal lawsuits too. President Trump replaced a number of government officials who had been overseeing many of these investigations, and according to the Washington Post, Elon Musk's Doge was able to lay off staff at a number of agencies that regulate his businesses. When questioned about the conflicts of interest in a joint interview with President Trump on Fox News, Musk said, "I'll recuse myself if it's a conflict," and the president said he won't be involved. While the ability to shut down investigations into his businesses should have helped him out, Elon Musk recently confessed in a Fox Business interview that he's running his businesses with great difficulty. And that does seem true. Tesla erased all of the stock price gains that it saw in the wake of the election, and the backlash against his companies was so severe that the president had to buy one of his cars on live TV while singing its praises, presumably to revive sales.
Everything's computer.
Musk's social media company, Twitter, was taken down by a cyber attack, and 2 of his Starship rockets exploded shortly after their launches, grounding flights in Florida and the Caribbean, and triggering warnings about falling spaceship debris. According to the European Automobile Manufacturers Association, Tesla sales in Europe fell for a second month in a row this February, and to make it worse, this was during a period when EV registrations overall on the continent grew. Tesla sales in Europe are down more than 40% so far this year, and the company's European market share has collapsed. The press blames this on a few things like aging design, rising competition, and controversy around Elon Musk. The problem isn't just in Europe either. According to Kelley Blue Book, Americans registered 11% fewer Teslas in January than they did a year ago, during a period when they registered 44% more electric vehicles from some rival brands. According to the website Futurism, Tesla's sales in China have fallen 49.2% compared to the previous year, while BYD, Tesla's biggest Chinese competitor, saw a 90% increase in sales over the same month. While sales declines in the United States and Europe can be blamed on Elon Musk's political activism, The Chinese are less concerned with American politics and liberal ideology and appear to be buying Chinese cars because they believe them to be more advanced and because they're significantly cheaper. The Electric Vehicle Council of Australia also reported a Tesla downturn, with sales falling by 70% in February 2025 versus February 2024. Interestingly, Tesla sales actually rose 20% in the UK last month, with the Model 3 coming second and the Model Y placing third in February 2025 new car registrations. Another exception was in Canada, where Tesla sold about 8,600 cars in just 3 days at 4 separate Tesla dealerships in Canada this January. This breaks down as one car every minute, 24 hours a day for 3 straight days, even when the stores were closed. This burst of sales came as an EV rebate program in Canada ended in January after the funds set aside for the program were allocated earlier than expected. The weekend before the program ended, there was a massive increase in claims from Tesla dealerships as the EV maker claimed over half of the remaining funds. Canadian news reports that hundreds of Teslas piled up in Canadian parking lots after the suspicious sales rush, and the Canadian government is now withholding the payments while they investigate any possible fraud. The Canadian Transport Minister has barred Tesla from future rebates in other programs until the threat of US tariffs on Canada are withdrawn. Some of the global sales decline has been blamed on customers waiting to buy the refreshed Tesla Model Y, which just became available this month. But journalists are reporting that the new Model Y is showing on the Tesla website as being available for same-day delivery today, which doesn't indicate that demand is awfully strong. Another reason that people might not be buying Teslas is that at the rate that parts fall off of Cybertrucks, there's no real need to buy one. If you really want one, you can just start collecting parts from the side of the road, and after about a year, you can just assemble your own one. The Cybertruck is in many ways like a reverse kit car, where they deliver you a fully assembled truck, but after a while you just have a collection of parts in boxes in your garage. At an all-hands meeting with Tesla employees last week, Elon Musk predicted strong demand and told employees to hang on to your stock. His brother Kimball, who's a Tesla board member, sold $27 million worth of stock last month, and the chairwoman of the board, Robin Denholm, sold $33 million worth of stock, according to regulatory filings. So not all employees have been listening to him. Around half of Elon Musk's net worth is tied up in SpaceX, which owns Starlink, the dominant satellite internet service provider. Possibly due to Musk's political connections, the service has been installed at the White House, and Trump's Commerce Secretary has even lobbied officials to consider Starlink for the US Rural Broadband Access Program. Reports show that the Federal Aviation Authority has been asked to find funding for Starlink, possibly replacing a $2.4 billion 15-year contract that was already awarded to Verizon to overhaul a communication system in 2023. According to the FT, Musk's foray into politics has also begun to hamper SpaceX's global expansion plans too. They report that the Ontario Premier, Doug Ford, ripped up a $100 million deal with Starlink in response to US tariffs against Canada, and that Musk's controversial behavior has caused problems for Starlink adoption in Brazil, Italy, and even in his home country of South Africa. They write that European countries are so concerned with US threats to cut off Starlink access in Ukraine, a service that's paid for by Poland, that the EU is proposing to fund a homegrown alternative to Starlink for security purposes. While the news reports that Twitter is back above the $44 billion price that Elon Musk paid for it in 2022, many investors are highly skeptical about this valuation, as user numbers and advertising revenues have declined significantly since 2022. The transaction that values the business at $45 billion was XAI, another Elon Musk company buying it. A person who saw the documents described the earnings number reported as being wildly adjusted to the FT. It's not obvious that an unrelated party would pay anything like that to buy the 12th most popular social network. This transaction is similar to when Tesla bought SolarCity in 2016, where Musk folded a company that's been losing value into one that's been gaining value. He owned 54% of the AI company and used it to buy Twitter, which he owned 80% of. The other investors in XAI shouldn't be too happy with this, as they owned a clean investment in an AI company which is now saddled with a social media app that has lost its relevance. In recent weeks, anti-Musk protests have been occurring at Tesla showrooms around the world, and there have even been incidents of Tesla cars and charging points being vandalized by protesters. Politico reports that Musk's government role, his antagonistic tweets, his boosting of far-right propaganda, and the salute he gave at Trump's inauguration ceremony have made him a lightning rod for anti-Trump sentiment, and his products a target for protesters. The problem isn't just the protests. A recent UK survey found that 70% of Tesla owners say that they're ashamed of their car. It's not necessarily that they have strong feelings about Elon Musk, but just that driving around in a Tesla leads other people to think that they're Elon Musk fans, which they find embarrassing. Most people just want a car, and they don't want it to be read as being a political statement. According to Joseph Spack at UBS, while many American consumers approve of Doge cuts in government spending, Musk may be turning off the US consumers most likely to buy a Tesla. He says that among high-income consumers who say they plan to purchase an EV in the future, Tesla now ranks lower compared with competitors than it did 1 year ago. NPR reports that the Tesla brand has soared in popularity amongst Republicans and conservatives in the United States, but they say that the liberals, moderates, and independents that Musk is driving away are more likely to consider an electric vehicle. They say that EVs' towing problems can be an issue for Republican buyers who are significantly more likely to buy a truck and use their vehicle for work. The new fans that Elon Musk is winning over might like Musk, but they don't want to buy an EV. So are Elon Musk's businesses in real trouble, or are they just facing a temporary setback? Well, a few years ago, Tesla investors pitched the idea that we were on the path to a 100% EV future, and that Tesla had no competition in that space. This justified, in their minds, Tesla being worth more than all other car companies combined. Today, the idea that ICE and hybrid vehicles will disappear is much more in question. Additionally, Tesla has significant competition from both traditional automakers and new manufacturers from China, who might be beating Tesla on the tech front. BYD recently revealed new fast-charging technology that can add 250 miles of range with a 5-minute charge, significantly faster than Tesla and matching the convenience of a regular car. Tesla recently announced that it had completed regulatory approval for a pared-back Chinese version of its full self-driving software that costs about $9,000 extra per car in China, causing the stock price to rally sharply. But its biggest Chinese competitor, BYD, launched its own full self-driving software at no additional cost. The Tesla software alone costs as much as BYD's cheapest vehicle. Tesla has been dead money for investors for quite some time. While Tesla investors celebrated in December 2020 when the stock was added to the S&P 500, the stock has just gone sideways since then, and the S&P has almost doubled. Barron's argued a few weeks ago that it didn't deserve to be in the Magnificent Seven, a group of high-growth stocks, as unlike the rest of the group, Tesla is a richly valued, highly volatile stock that trades on hopes for the future rather than dominance in the present. It's difficult to know how Trump's trade wars will work out, but for countries who want to retaliate, putting tariffs on Tesla cars and cancelling Starlink subscriptions is an obvious response. While Trump's new tariffs on imported cars will hit Tesla along with all other automakers, as Teslas contain 30 to 40% of foreign source components, Analysts still report that the tariffs will hit its competitors harder and that Tesla will be the clear winner in the US market. Of course, retaliatory tariffs can be expected, and Tesla still sells the majority of their cars abroad. Valuing Elon Musk's business ventures has become much more difficult since he became involved in politics, as so much now depends on the evolving political landscape. For example, what happens to these businesses if Trump's friendship with Musk ends? While Elon Musk's cost cutting within the US government has been proceeding at a furious pace, the Washington Post pointed out that Musk himself is one of the greatest beneficiaries ever of US government largesse. Over the years, they report that Musk and his businesses have received at least $38 billion in government contracts, loans, subsidies, and tax credits. The US government's support, they show, stretches back more than 20 years, but nearly two-thirds of the money was committed in the last 5 years, a lot of it during the Biden presidency. Just last year alone, they show that federal and local governments committed at least $6.3 billion to Musk's companies, the highest total to date. While this number might rise due to Musk's connections within the US government, it could equally collapse if Trump and Musk had a falling out. Today, Tesla is still valued at around 100 times its projected earnings, far more expensive than other auto manufacturers, which suggests that investors are pinning their hopes on new technological breakthroughs and rapid growth, and we'll have to wait and see how that works out. If you found today's video interesting, you should watch my video on the dumbest mega projects next. Don't forget to check out our sponsor, Delete Me, using the link in the description below.